Greetings, folks. In our day to day stock trading decisions using technical analysis, we often overlook a very important factor, and that is volume of trades happening in a given day or a given time frame. In this video, I'm going to talk about how to interpret trading volumes and how to utilize that in making smarter and more confident trading decisions. But before we proceed, a quick word of statutory disclaimer. The information being shared in this video is for educational and informational purposes only. It should not be construed as an investment advice. Individuals are encouraged to do their own research and assume full responsibility of any actions taken based on the suggestions provided. Most traders, when using technical analysis for making trading decisions, use price as the primary indicator. And rightly so, because price at any given point of time is a true reflection of the value as perceived by the participants. They believe that price at any point in time reflects everything that is to be known about that particular stock, as well as the overarching prevailing macroeconomic conditions. Why is then volume important? Whilst price represents true value at any given point in time, the volume is a reflection of the emotional commitment of the traders. Let me explain how. When you are buying a stock, you are buying it from someone else. So when you buy, there is a seller. By buying into a stock, you are making a financial commitment with a hope or with a view that it will go up in price. Whereas the person on the other side of the trade, the one who's selling to you, is not expecting it to go further up, or if he or she is a short seller, they're expecting the prices to go down so that they can cover it and buy it at a lower price. On either side of the trade, there is a financial as well as an emotional commitment. Every tick the price moves in your favor, it makes you happier, but the opposite side is filled either with anger or regret. So both sides are emotionally committed into that one single trade. For the price of a stock to rise after you bought it needs a fresh set of buyers who are willing to pay a higher price than you did. And for the stock to be continuing this trend of rising prices, there has to be a perpetual supply of new buyers who are willing to pay higher. As the price continues to rise, there will come a point when there is less and less supply of buyers at a higher price. That will lead to low volumes. So when you get into a situation when the prices are rising but the volumes have started dropping, that's an indication that that particular stock is now ready for a little correction or reversal. If a stock price is range bound rather than trending, typically the volumes will be relatively low. And that is because there is a general consensus among the participants about the range of the price movement. When the price breaks out of this range, and it is coupled with a high volume, that demonstrates that there is more interest in price to move in that particular direction of the breakout. However, if the breakout happens with a low volume, then it's an indication that it might be just a fake breakout. When I use the expression high volume or low volume, I'm using it in relative terms. On most platforms, volume is indicated as a series of vertical bars, usually plotted below the price chart. When you look at the height of these bars, you can tell whether the volume is higher or lower in comparison to its surroundings. If you have reached this point in the video, you deserve a more concise summary of how to apply volume analysis in enhancing your trading decisions. So here we go. Let's first deal with what to look for in a rising trend. In a rising trend, if the volume is steady or increasing, then you might want to either buy or add to your existing long position. However, if you see a very high increase in volume, it might be a sign of a possible blow off, which is typically an indication of shorts burning off. Now, this is the time to tighten your stops and take some profits. The third condition in this is if the price continues to rally higher, but the volumes are now decreasing, it's an indication that there is a lack of new fresh buyers at higher prices. So it's a forward warning for a potential bearish divergence coming. In such a situation, you should take profits, tighten stops, or if you play shorts, even consider starting a short position. Number two, in a declining trend, If there is a steady volume or increase in volume, then it indicates continuation of the downward trend. The action to take in such a situation is to refrain from buying or adding to a losing position. Basically, do nothing. Often, retail traders make this mistake. They see a long term downward trend and they feel that because the price is low, it represents a better value. But what you don't know is when it will bottom out. So, if there is a steady flow of volume in a downward trend, refrain from adding just because it feels a better value. However, if the volume starts decreasing, it's a sign of the fact that the beers might be running out of steam. Even so, you should look for some other reversal signs before you jump in. So, unlike in a rising trend, where decrease in volume indicates that the reversal is more likely to happen. In case of downward trends can continue even with low volumes. And last but not the least, if the price of a certain stock has been in a tight range for a while, then if the breakout happens with a higher volume than the usual, then it's a good sign that you can take a trade in the direction of the breakout. Okay, so typically from a buying perspective, if it's a range bound, whether in a declining range or a sideways range, and if the breakout happens to the upside with a high volume, then it's a good indication to buy into that stock. Likewise, if the breakout is to the downside from sideways range or a rising trend range, then it is time to close out your position and run because such a breakout might go quite deep. Hope you found this useful and are able to apply some of the learnings to your day to day trading decisions. I'll appreciate if you like the video, subscribe to the channel, and also share with people who might benefit from this. Thank you. Namaskar.